Welcome to our class today, our free lectures today. This class is hosted by Speedysuccess Professional. For those of us who have been watching the previous class, I will read this practice question now for us. I'm going to be gentle with the practice question. Read it so that you can write. After this class, I will also post the question to this platform, this page. My name is Femi, Richworld, Aiyeolowo. I represent Speedysuccess Professional. Speedysuccess Professional is providing this free classroom for as many that needed to learn one way or the other this concept. The topic is how to solve break-even point analysis question or CPVA. CPVA simply means cost volume profit analysis. For as many candidates that are 200 level in cost accounting class, management accounting class, advanced management accounting, 300 level, 400 level, professional students for professional courses that are studying management accounting and performance management. Owners of businesses needed to know how many products can I produce. For example, you have a bakery. How many bread can I produce to break even? What break even means? No profit, no loss. This is the purpose of this class. Please, if you have not watched the old video, the formulas, please watch the video and come back to watch this also. Or as you follow, watch this video and watch the older. Like I said, I'm going to post this question after the class. Can I read the question? All right. The question is, SSP2 Limited manufactures varieties of machine tools. Following are taken from the financial statement of the company for 2019. Please, if I'd like to read that again, if you're writing, you can pause it and write. SSP2 Limited manufactures a variety of machine tools. Following are taken from the financial statement of the company for 2019. On the left, you can do two columns. On the left hand, you have sales 10,000 units. On the right hand, you have 500,000. Variable cost 300,000. Fixed cost 160,000. Tax rate is 40%. You are required. A. Determine the break-even points in units and the naira value. 2. Determine the margin of safety and the margin of safety ratio. Then interpret your result. And see if 9,500 units are sold, what is the profit before tax? Then D, if sales are 475,000 naira, determine the profit before tax. That is the solutions we're going to be doing. So when I send this practice question, we have other questions there that can practice with. Again, Speedysuccess is an accredited ICANN tuition house. We also provide training for marketing students, banking and finance, CITF, ICT for accounting software of all type. You want to learn from us or consult us for any service because we're accountants. Chartered accountant for that. Our line, very easy and busy line, is 081 4842 1111. 081 4842 1111. When we're done with this class, call the line. Thank you. All right, today we're going to solve that question. So on the screen, we have the solutions. I'm going to get the camera closer and we will see how the solution are done. Take note, the first question is determine break-even point of units and a value. Thank you. All right, so we move to the first solution. Get to the board, get clearer information. Now, this first solution is to provide calculation for break-even points in unit and in value. So you can look at it carefully. Sorry for that. Good. Okay. Now, the first solution is determining break-even point in units. So I put the heading of the company, SSP Limited, calculation of break-even point in units. The formula is fixed cost all over contribution per unit. And then I went ahead to show us the working. This is the working. Contribution per unit is 500,000 naira, which is shown on the question, minus the variable cost, which is 300,000, all over the number of units that the company have projected to produce. That will give us 20 naira per unit. And so we go ahead to apply it. When you divide 160,000 by 20 naira, excuse me, you will have 8,000 units. So this company will produce 8,000 units of the product to break even. Don't forget the word break even means no profit, no loss, where you must have taken all your costs. That is total cost minus total revenue equals 0. The next question is calculation of break even point in value. The formula is fixed cost all over contribution margin ratio. And the working for contribution margin ratio is sales minus variable cost all over sales. That gives us 0.4 or 40%. So we go ahead to look at the solution. Solution is 160,000 divided by 0.4. That gives us 400,000 naira. And that interprets that break-even point in value is 400,000 naira. When you sell 8,000 units, you will have a total sale of 400,000, and that will allow you to make 0 profit. Are we together? No loss, no profit. Can we go ahead? Now we move ahead. Those of us online, please don't send any question. Just watch. After the class, you can send your question, please. All right, can we go? The next question is determining margin of safety. Determining margin of safety. Margin of safety is budgeted sales minus break-even sales. Budgeted sales in this question is 10,000 units minus 8,000. That is 2,000 units. So the company has a safety of 2,000 units. Another word for safety is the quantity you produce above your break-even point. Margin of safety value is 500,000 units minus 400,000 units, that is budgeted sales minus break-even sales. It gave us 100,000 naira. So the company has 100,000 naira above, which we can call net profits. That is profit we have after tax, profit that you made if you have sold this quantity. Then what is margin of safety ratio? Margin of safety ratio is budgeted sales minus break-even sales all over budgeted sales times 100%. You can use whether the unit part or you use the value part. So I have used the value part. I have 20%. I have 20%. I have 20%. Are we good to go? Now, what is an interpretation? The interpretation depends on your grammatical expression, but what it interprets is that this company have a safety of 20%. So if the price of product or competitive product becomes lower than the company's own, and the company is losing customer, the company can reduce its price by at least 20%, at most 20%. You can reduce your selling price by 10%, 5%, 15%, 17%, 18%, up to 20%, so as to continue to make profit. Are we together? That's the interpretation of the margin of safety ratio. You do not lose anything if you have been selling and there's a competitor, a new marketer, a new competitor in the market. People are now moving to them, and you check the price, and maybe the price is by 10% lower than yours. You can reduce your own by 12%, so as to keep beating the market. I've told you earlier, this topic is for everyone doing business. You want to know how to make profit, please follow this class. My name is Femi Richworld. We are Speedysuccess Professional. You can call us on 08148421111. Let's quickly move to the next group of solution. Solution C is determining profit before tax. Now, the assumption in this place is that the profit we are getting from this break-even formula is profit after tax. Take note of that assumption. So we move ahead. Now, the Zaya says formula is profit plus fixed cost all over consumption per unit. Where we have sold 950,000 units, our profit will be plus, we don't know profit, plus 160,000 over 20. Cross multiply, you have that P minus 190, or P is equal to 190 minus 160, and then we have 30,000. Profit before tax, profit after tax, all over 1 minus T tax rate. And then tax rate is 40% as given in the question. So our profit before tax is 50,000 naira. Are we good to go? Please, you are welcome. It is Speedysuccess Professional free online class. This is performance management or management accounting class, and we are dealing with how to solve questions on break-even point analysis. Let's take the last question. Sorry for that. The last question is if you have a sales of 475,000 units, what will be your profit before tax? Using the same formula, desire sales equals to profit plus fixed cost all over CMR ratio. You will have 475 equals to P plus 160 over 0.4. When you cross multiply, you have the figures as shown. Profit before tax is profit after tax all over 1 minus tax rate. And we have this as the figure. Wow, what's this? So let's fire on. Now the last part is that we are done this question. Our line is 08148421111 for full lectures and services. You are an ICANN student or you want to be one, please call us 08148421111. You have your start to trade, please call us. You have your business consulting, you want accounting, your account system to be well set up, call our line. My name is Femi Richworld. Aiyeolowo. God bless you. We have ended our topics on break-even point analysis. Where we come next week, we have a new topic. Thank you. God bless you. Share this to your friend, everyone that needed to understand how to determine break-even point. Thank you.